Okay, now note that IS 7 permits interest paid to be classified as a cash outflow within either operating activities or as a financing activity. The important point is to ensure that cash outflow for interest paid in the year is classified either within operating activities or within financing activities and not included twice. So yeah, it is basically saying over here that if you go onto the format as well, and if you find interest paid is written on two sides, right? We are first of all writing the interest payable as well, right? We are writing the interest paid in the cash from operating activities in the first head, and in the last head you can see the third one, cash flow from financing as well. We are writing interest paid over there as well, right? So it's just saying that we just have to make sure that it's not included twice. It's just included once. It's just written once and with a minus, right? It should not be included twice over here, because if it is included twice, the cash flow will be wrong over here. The answer will be wrong. Okay, so calculation of proceeds from the issue of shares is derived by comparison of the amount included in the financial position. Okay, so if you remember, if you have the format open in front of you, and if you can look the amount which we just wrote in the format, and that was basically proceed of share issue. So let me explain you that as well over here. Okay, let's say, one second, this is proceeds from share issue. So I'm just explaining you basically the exam technique, what we'll do. So some student get confused in this type of questions whenever this share issue comes. So let's say there are two kind of share issue, right? The capital as well, the premium as well, right? So share capital and then share premium, right? These two kind of things are there. Let's say there are 2 years given over here. Let me write it over here, open space, share capital, right? And share premium. So how will we basically calculate the proceeds from share issue? There's a very simple way of this. Let's say there are 2 years given. Every time you will be given with a comparative figure, okay? 2020 and 2021. So what you'll do is that, let's say share capital over here was 50,000, right? And let's say over here it was 70,000, right? Let's say over here the premium in 2020 it was 30,000, and let's say over here it was let's say 55,000. Okay, so how do we calculate the proceeds is basically during the year, because cash flow is being produced for 1 year, right? It's for 12 months, not for the whole 10 years or the 15 years the business is operating. So we are just calculating for this period in between, right? Which is coming in between this. So how do we calculate the increase? The total of this is 80,000, right? 80,000, and the total of this will be, I guess, 125,000, right? So what we'll do is we'll minus these two figures, very simple. So what we'll do, 125,000 minus 80,000, right? So this will give us a very simple figure of 20 and 20, 40, 45,000, right? So this is actually the shares, the proceeds from share issue that we have got within the year. We have to compare and delete both the amounts. We have to take the difference of 2021 and 2020 in this case. It depends, you can be given in the question for different kind of comparative balances.
So
Okay.
we have to use the 45K, but I mean, for share capital or for share premium?
No, for overall, for this amount. If you see in your in the format that we made,
Oh, okay.
this was the
Okay.
amount, right? For the proceeds of share issue. So proceeds from again, I'm repeating that it was financing, right? So cash flow from financing. How can one company finance? From either debt, from equity. So debt will be given to you, like this much loan it got in this year in 2022, right? But for calculating this proceed from share issue, I was just telling you, we have to compare two figures, and those two figures, the 2021 is also like a sum of premium and capital, and 2021 is also a sum of premium and capital. So we have to compare these both figures. Some students, what they do is they ignore the premium, they just do 70,000 minus 50,000, and that's wrong over here. So we don't have to exclude anything, we have to include the premium as well, right? And we have to take the difference, because the difference will include, right? At 2020 it was 80, at 2021
Yeah.
it was 125. So difference will be the extra cash that we received during this year. Okay, right? And the same thing, if you look over here in the study text, it's the same thing. It's explained over here in this paragraph. Okay.
Okay.
Now for the dividends paid, I explained to you that from what reserve these are minus from. These are only minus from retained earnings, if you remember, right? So
Yeah.
business entity can only account for dividends paid to its own shareholders on a cash basis in the financial statements, right? As dividends paid are effectively paid out of retained earnings, the same thing, it is usually necessary to reconcile the opening and closing balances. So for this, how do we get this figure if it is not given to you in the question? How do we calculate this figure? We again make a T account for which account head? For retained earnings. Okay, because retained earnings contains the dividends, right? So what we do is,
Yeah.
let me write the detailed T account because unfortunately it's not in the study text. So this is retained earnings, right?
So this is for the dividends when we have to
Yes, exactly. Dividends paid, right?
pay.
So this is retained earnings. Again, this is a reserve. It's a part of capital, right? So increase will be on this side. Decrease will be on the debit side, right? So opening balance will be on this side. Closing balance will be on this side, right? And any kind of profit that we get, because profit and loss is basically at the end of the day it's added in retained earning, right? So profit is over here, and loss is minus from here, right? And any difference that we get, that is actually dividends paid, that comes over here. This is the balancing figure. This is the figure that we have to find, that I've highlighted over here, because at last we are finding dividends paid, right? So this is the format of retained earnings. You can write it as well if you want to. And
Yeah.
this topic is basically finished over here.
Okay.
Okay, right. So
Okay,
with
done.
this said, we will be taking a short break, let's say 4 5 minutes, right? And after that, we will be starting with the exam kit questions. Okay.
Okay, thank you.
Okay, let's start. So are you ready?
Hello.
Okay, hi. Are you ready? Yeah, should we
Yes.
start? Okay, sure. So we are starting with the question 330. So from the
Yeah.
exam kit is basically, let me tell you the question range. It's 330 till 351. Okay, I'll try to do like 5 or 6 or 7 questions, as many questions as possible in the time that's remaining. And the remaining questions you will have to practice and let me know if there is any kind of issue. I'll tell you basically the format of how we do this, because I already looked them in the study text as well. All the things, what you actually have to do is that this might be a part of section B. So what I'll be doing is that we will have to keep some extra classes on maybe this weekend, let's say, the live classes that will be on the long question, because till now we have been doing section A questions, right? The section B questions we are not looking right now, but still that will take just like 2 or 3 days, just 2 or 3 consecutive proper classes that will take, and I think that will also be done. So in section A, you can see that mostly it will be asked like this in this format. Like it will just be asked. It will just ask you like one of the heads. Like we studied 3 heads, right? Operating, investing, and financing, right? So over here you can see in question 330, it's asking the last head total, right? What is the net cash inflow from financing activities? So there's just, I think, 1 or 2 things to add, and 2 marks will be easily gained over here. It's very simple.
Okay.
Okay, so you can see that this was what I was explaining. First, let's write the financing activities formula over here. 1 second. So this is financing activities. Okay. Now, in financing activities, there were like 2 or 3 things that we had to add. First of all, it was proceeds from share issue, right? And after that, there was, receipt of loan, right? And let's see, whatever comes in this question, we'll have to add or minus that. Now you can see that it's in 2018 and 2019, comparative figures are being given over here, right? So the figures over here, you can see that equity shares or at $1, it's 300,000 and 120,000, right? And share premium is also given over here. So what we'll have to do is that we'll have to deduct the total of this with the total of 2018. That only that way we'll get the share issue proceeds, the shares,
Yeah.
the cash received from the shares during the year, right? So this total will be, I think, 560,000, right? And this total will be, I think, 220,000, right? So if we minus
Yeah.
them, we will get 340, yeah, 340,000. So 560 minus 220, this will be giving us 340,000 answer. That means this is basically the proceeds from the share issue, right? And the answer was 3,40,000. Okay, now let's see what else we have got over here. So on 1st January 19, a bonus issue of one share for every 12 held at 31st December 18 was made, and loan notes of 300,000 were issued at par. Interest of 12,000 was paid during the year, right? So that means you can see that bonus issues have also happened over here, right? And what will happen is that these bonus issues 31st December 2018 were made. Let me confirm one thing. Yeah, so what we'll actually do is that from bonus issue, when we studied the capital structure chapter, from bonus issue there were two implication of this, two effects, right? First of all, it increases the share capital, right? So the entry was basically credit share capital and debit share premium, right? So we will have to
Yes.
basically include this. I think it's not included, but we will have to include this in these figures, right? Let me just give me like 5 or 10 seconds. Let me confirm this from the answer as well, so that we're not moving on the wrong paths. One second. 330, because I think this should be included. Uh, yeah, exactly. It's being included in the answer. Yes. So we found it on time, and let's include this. Just a second. Okay. So basically, I'm erasing this answer. This is not 340,000. We will have to include the effect of bonus issue as well, right? So let's calculate bonus issue, right? And bonus issue, you can see that it was how much? It was one for every 12, right? So you can see that basically in 2018, right, the year end is 31st December, right? On 1st January 2019, so basically we have to take this figure 120,000. We will calculate the bonus issues on the basis of this 120,000, because it happened during the year, right? It happened at the start of the year on 1st January 19, right? So what
Yes.
will happen is that we'll do 120,000 into 1 by 12, right? So I think this will be giving us the answer of 12,000. Yeah, it will be 12,000. Let me confirm this again. So 120,000 into 1 by 12. Sorry, it's giving us 10,000, not 12. Okay, so it is 10,000. That means the number of shares that were issued, the number of bonus issue shares, these was 10,000, right? And the par value, you can see it's written over here, it's $1, right? So everything is made easy over here because the par value is $1. So everything will have to multiply it with $1. That means effectively the numbers will be the monetary values as well, right? Because the par value is $1 over here. So that means what we'll have to do is that this 10,000 will get deducted from this 120,000, right? And this 10,000, sorry, it will be added in this 120,000, and it will get deducted from 100,000, which is the share premium, because this was a double entry, right? So what we'll do is debit share premium and credit share capital by 10,000 and 10,000. Okay, right? So
Mm-hmm.
I think this will be deducted, yeah, from this balance. So ignore these ones. This will be deducted from these ones, because you see this is the 2019 one, right? Because in 2018 we did not know we have to issue or not. It actually happened on 1st January 19, right? So this, the closing balance on 2019 will reflect these figures, right? So we'll have to minus these from these figures. Let's do it. So it was basically, let's say the equity shares will now have been um, 3 lakh 10,000, because 10,000 will be added, right? And the share premium is being deducted, right? It's being debited. So that means this will be 250,000 over here. 250,000. Okay. But nonetheless, I think the answers for the same will be the same. Let's check it out. So 310 plus 250, it's 560 minus 220, the total of this one. And yes, exactly. The answer is same over here, right? The answer is same. What I did is 3 lakh, sorry, it was 560 minus 220. So you can see the effect is basically same, because what we did is that premium we got minus and capital we got plus. So the net effect is zero, right? In this case. So that means
So
the difference.
do we have to like calculate these or not? I mean, when I see this bonus issue, do I have to calculate it or not? Because, it gives us the same,
Yeah,
the same.
exactly. That's what I was going to explain. You can see that in this case we were lucky. You will have to, first of all, the answer is that we will have to calculate this in every circumstance, right?
Yes.
Because we were lucky in this case, the par value was only $1. But what if the examiner gives you the par value of, let's say, 25 cents or 30 cents? In that case, the amount will change into 30%, right? It will not remain 100%, because we'll have to multiply it with 0.3 or 0.25, whatever the par value is, right? Because the double entry we create of the bonus issues, the double entry we create according to the par value, right? So in that case, we will have some different amounts that we'll have to minus, right? But in every case, we'll have to minus this.
Okay.
Okay, but if you consider it from another aspect, I was just being safe by calculating this, right? But yes, if you consider it from cash perspective, we are not receiving any cash, right? We are not receiving any cash in case of bonus issue, because we studied it from the start that bonus issues are free shares, right? There's no
Yeah.
cash involved in that. So yes, in that case, even if you leave this, then yeah, I think there's no problem. So let me revise my answer, let me take back my words. Even if you don't calculate it, then it's fine over here. I just did them so that we are kind of revising the old chapters as well. Okay, right? So
Okay.
this
So
was the same 340,000. It's not, I don't think it's important to calculate it over here. We just wasted our time basically. So second thing, let's see over here, it's loan notes, right? Which was 300,000. And this is receipt of loan. We received these loans, right? 300,000. And after that, there is interest paid, right? Interest paid is being deducted from cash. So that's why interest paid is 12,000 deducted. Okay, so 340 plus 300, and we'll minus 12 from here. So that means the answer will be 628,000. Okay.
also,
It's not
we
here.
are sure.
1 second. 300,000 were issued at par. We might be doing something wrong. Just a minute. Let me open the answers in the second window. Share premium is minus. Just a second. Okay, so what it has done is total proceeds, if I share you the screen. So total proceeds were 340, that's correct. Plus 300,000 proceeds of loan note, that's also correct. That's 640,000, right? Interest paid is included within the operating activities. Oh, right. So in the question, unfortunately, it has written nothing about the interest, right? Because if it wrote something about the interest, that it was already deducted in the start. So it's basically trying to say over here, if you read the last line, interest paid is already calculated in the operating activities. It's already included over there. That's why we'll not have to minus it over here. Okay, so yeah, I'm ignoring the interest paid over here. So by this way, what is the answer that I'll get? I'll get the answer as 640,000. Right. So one more thing over here, that interest paid always doesn't come over here, right? We'll have to meticulously, see the answer. But in normal circumstances, it will be included in the uh, amount in the cash from operating activities in the first head, not this third one. Okay. So this was the mistake over here. 12,000 should not be deducted. So the answer would be correct over here, which is 640,000.
Okay, because basically that is not a part of the financing activities,
Yeah,
right?
exactly. If you have a look at the format as well, that's the mistake I did. It's not included over here. It's already adjusted in the
Okay,
operating.
so the first thing is that if there is a bonus issue, we don't have to calculate that one.
Yeah, that's right.
So we just, see the difference between the 2 years.
Yeah.
And then there is the loan notes, we are going to add it there.
Yeah, exactly.
Okay.
Okay. And because this is financing, right? So yeah, dividends paid will be minus, obviously over here, but interest paid, I think we'll have to ignore it over here.
Okay.
Okay. Now 331, let's look at this one as well. Now, what is the net cash flow from investing activities? Okay. So what happens is that we have to again find the second head answer, right? Net cash flow from investing activities. Now in investing, if you remember, there were several kind of things. So in investing, let me write over here. First of all, we write the purchase of non-current assets, right? And after that, we write the proceeds, right? Proceeds of sale, right? And I think after this, if we are investing, we will receive the interest received, and dividend received. Yeah, these were the four things, right? In the format,
Yes.
right? Now, first of all, let's see. You can see the information over here. It's interest accrual brought forward. Interest accrue. So accrual basically means anything which is delayed. Remember from that chapter, and anything which is delayed will be coming into a liability, and that liability will be called a payable. So we can call it that this interest, the opening and closing balance, is the payable balance. Okay, and from this T account, we'll have to calculate the actual, interest that is paid basically. Okay, but interest received is given over here, right? So in received, we write it over here. And proceed of share issue, this is investing, right? So investing does not contain share issue. Loan repaid, dividends. Yeah, these are the
That's
dividends.
financing, yeah.
Yeah, but these are the dividends that are paid, right? Because in the changes in equity, we write the paid dividends, right? But in this case, we are writing only the received. Can you please confirm this is correct, right? These four things are correct, right? Over here.
So it's investing, purchase of PPE,
Yeah.
proceeds of sales of equipment, interest received, and dividends received.
Yeah, that's correct. Okay, 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 right. So that means interest payable. These three information are regarding the um, interest paid, right? And we have to write the interest received over here, which is 13,000. Yeah. So this is also for confusing purpose, right? And interest received is the only thing that will enter. This is also for confusing purpose because this comes under financing. This is also financing, right? And this is dividends paid, right? So yeah, this is also financing. So only out of like 7 things, we have to include just one thing, 13,000, right? So I think the correct answer should be 13 as well. Let's check it out. Yeah, exactly. 331, 13,000 inflow, because out of 7 things, only one was relating to the investing one, which was interest received, right? So the answer for this will be 13,000. There is nothing else. You can see no purchase, no proceed of sale, no
Sorry,
dividend.
Eddie. Okay.
I'm sorry. Yeah, no
Because
dividend received, no
the
purchase.
interest receivable,
Mm-hmm.
interest receivable, you know that there is that T account.
Yeah, but
And there
that's basically that's made if you have the opening and closing for the interest receivable, right? This was the interest payable because accrual basically is a liability, right? So it's a interest payable. But this is all for calculating the interest paid. But interest paid is again calculated. It's used in the financing, right? Not the investing.
sorry, and the dividends, I mean, those shouldn't be like also.
You see, if you remember the changes in equity, in changes in equity, we were writing the dividends and they were getting minus from the retained earnings, right? So over here, it has also confused you. And basically it means that these are dividends paid, right? But this is investing, right? In investing, we have to write dividend received, not paid. Okay. So interest received will be the only thing that we are writing over here. That is 13,000. And that's the inflow. Okay, right? Okay. Is it clear till here? Any questions, issues?
Yeah, I mean, it's just, those dividends. I mean, so how, I mean, if there is like interest received, oh my God, dividends received.
Yeah, yeah.
So I mean, how do we know when we have to include them or not?
Because
When there
see,
is
look,
changes in equity, I'm not going to include them. Okay.
yeah, exactly. You will only
Okay.
include the
But
dividends.
why?
The dividends received, they will be given to you exactly in the question. The good thing is that you will not have to create
Because
a T
when
account for
we
that.
pay, so it's like credit cash and debit returned earnings. So we
Yeah,
pay.
exactly.
But here we need to write down the ones that we have received.
Yeah. So basically, interest received and dividend received will mostly be given to you as it is in the question, like it's given over here,
Okay,
right?
I hate.
But if there is any kind of receivable balance, then you will have to write the opening, closing, and the P&L expense, P&L income,
Okay.
and you have to find the cash that is received, right? So the only difference over here is received and receivable. So able and ed, these are the two differences over here. Okay, we have to disregard the receivable or payable. We have to actually include the paid and received over here.
Okay.
Okay, right. Now 332, I'll just do the questions till 333 because we are short of time, and the remaining questions you'll obviously try and let me know if there is any kind of issue. So which of the following items could appear as items in entity's statement of cash flows? Okay, now bonus issue of shares. Do bonus issue comes in cash flow? This does not contain any kind of cash, right? So why would they come over here, right? So these will not be coming.
Okay.
Now, right issue, if you remember, this was like a discounted then market value share issue, right? We give the
Mhm.
existing shareholders, we don't give them for free, we give them at a much discounted price. But still, there is some kind of cash received, right? There is some kind of premium and cash as well. So these
Yeah.
will include. Okay. Revaluation of non-current assets. Revaluation, if you can see, it exactly does not come over here, right? But indirectly it comes in the T account. So basically we can say that this is not coming over here because again,
Yeah.
you can see revaluation is a non-cash expense, is a non-cash income. So any kind of non-cash we don't include. Dividends paid, yes, these are included. In which head? In the um, investing head, right? Sorry, in the financing head, right? Because if we are financing, then we'll pay the dividends. So these will also be coming. So 2 and 4 will be the correct answer. Option C over here. So option C is correct.
Can I ask you something? So, I
Yeah,
mean,
yeah,
the direct method was that, I mean, you know that there is the indirect and the direct method, as you said.
yeah, yeah.
So how is the direct method?
I think just ignore the direct method right now because it's not part of the syllabus, right? However, there is some information given in the book. It's just for understanding it. It will. I don't think it will be asked in the question. It's specifically not included in the syllabus, but still, if you want to know it just for knowledge purpose, you can read it from the book. Okay, there is
Okay.
some kind
Are
of
you
small
sure, you
paragraph.
know, that because I mean, I'm afraid that, you know, in the section B, they will ask me, do the direct or the indirect method.
I'm pretty sure it will not be asked, but still, I'll the next class we have to keep on. If I'll keep the next class on Friday or Saturday, I will confirm you when we keep the class of the doubts. But I'm like 95% sure that it will not be asked. But the remaining 5% uncertainty, I'll confirm you in the next class or on WhatsApp. Okay, right?
Okay.
Now 333. Let's look at this one. So which two of the following corrections need to be made to the calculations? Okay, so we have to make the corrections over here, right? Now, if you remember, this was the cash generated from operations part, right? This calculation from which we are converting the profit into cash, right? So in profit before tax, we add the depreciation. This is done correct, absolutely correct, right? So we have to basically tell these correction which of these are correct over here. Okay, so depreciation should be deducted, not added. No, this is wrong. We have added it and it is correct. The treatment is correct, right? Now, increase in inventory. If you remember, increase in inventory was basically minus because increase in inventory means we are purchasing more inventory, right? So that means this is also done correct, right? So decrease in inventories should be added, not deducted. No, this is wrong, right? Because decrease is added, increase is not added over here. Okay, now decrease in receivables also, if you understand it from logical purpose, decrease in receivables means that receivables are paying you right now, right? So if they are paying you, the cash is being released, right? And cash, if it is being released, cash will be entering into the company, right? So that means this should have been written on positive side, not on negative side. They should be positive, right? So that means decrease in receivable should be added, not deducted. Yeah, this is a valid criticism over here. This is very valid, right? We can raise a point because decrease in receivables releases cash, right? Cash is being given to us. So that's why it is not written on minus, it is written as a positive amount. Okay. Now increase in payable basically means we have got more time, more access to cash now, right? But decrease in payables basically means the cash is going out because payable decrease means that we are paying the cash, right? So increase in receivable should also have not been deducted, but in fact added over here. So this last one is also correct. This is also a valid criticism. Increase in payable should be added, not deducted, because
So
increase.
decrease in receivables should be added.
I'm sorry. Please ask again.
Decrease in receivable, why should be added?
Look, basically what happens is if receivables are being decreased, right? If receivables are being decreased, what is the double entry we make? Credit receivables, debit cash, right? So if receivables are being decreased, that means receivables are now paying us, right? And if they are now paying us, that means cash is being released into the company and cash is being paid back to us. That means it should be an increase, right? It should be a positive amount. Okay, this was the explanation for decrease in receivables. So that means this 3 and 4 is correct over here. Okay, got it, clear. So this was the whole chapter. It was a bit interesting as well and bit hectic as well, but we have done like 3 or 4 questions remaining. You can try yourself and let me know if there is any kind of issue. You can see there's all of these, heads being asked, like cash generated from operations. This is basically the journey from profit to cash, right? And then you can see over here profit before tax we have to calculate. In this question we have to move back. Basically all the things are given, we have to move back, calculate in a reverse order, right? How much cash has been invested in non-current asset. So again, we have to find the purchase of non-current asset, right? Regarding the T accounts, the T account is given information, right? And everything is very simple if we understand it through, a very simple term. We don't have to overthink anything in this chapter.
Okay, yeah, we'll try.
Okay, so yeah, try the questions if you have time, anytime, and let me know if there is any kind of issue that you're facing. Okay, got it, clear. So I will let you know